If the economy collapsed tomorrow morning, would your money survive? Imagine waking up tomorrow and discovering the economy is in trouble. Stock markets are falling. Businesses are struggling. People are panicking. Now here's the scary question. Would your investments survive? Or would they disappear along with the crisis? Because when the economy crashes, something very interesting happens. The safest investments suddenly become visible. Most people invest during good times. But smart investors ask a different question. What happens when things go wrong? Because you don't truly understand an investment until it's tested by uncertainty. Imagine 4 people standing in front of a storm. One owns luxury items. One owns cash. One owns stocks. One owns property. The storm arrives. And suddenly, every asset starts behaving differently. That's when the real test begins. Most people think cash is the safest place. After all, you can see it, touch it, access it. But here's the problem. Cash has an invisible enemy. Inflation. When economies struggle, governments often print more money. And when more money chases the same goods, prices rise. Your bank balance may stay the same, but its purchasing power quietly shrinks. The number stays. The value changes. Now let's look at stocks. During uncertainty, markets often react emotionally. Fear spreads faster than facts. Prices can swing wildly. Good companies may recover. Some become stronger. But during the crash itself, the ride can be extremely uncomfortable, especially for investors who panic. Now let's talk about something interesting. Property isn't just a number on a screen. It's a real-world asset. People still need places to live. Businesses still need places to operate. Families still need homes, even during difficult economic periods. And that's what makes property different. Its value isn't based only on market sentiment. It's connected to human necessity. Look closely at many wealthy families. Generations come and go. Economies rise and fall. Currencies change. Governments change. Yet one asset repeatedly appears in their portfolios. Land, property, real assets. Why? Because you cannot print more land. And you cannot download real estate. Scarcity matters, especially during uncertainty. Here's the mistake many investors make. They ask, what will make me rich fastest? The wealthy often ask, what will help me survive longest? Because surviving a crash allows you to participate in the recovery. And recovery is where fortunes are built. Now here's where most people get it wrong. Not all property is a good investment. A property in the wrong location can struggle. A property with no demand can sit empty. A property in a declining area can lose value. So the safest property isn't necessarily the cheapest. It's often the property people will still want, even during difficult times. So where is the safest place to invest if the economy crashes? It's probably not one magical country, not one secret stock, not one trending opportunity. The safest place is usually where demand remains strong. People still need what you're offering. And the asset has real-world utility. That's why investors often gravitate toward quality real estate, strong locations, essential assets, and investments with long-term demand. Every major economic downturn teaches the same lesson. Speculation gets tested. Hype gets exposed. Weak assets struggle, but assets with real utility tend to survive, sometimes even emerge stronger. The goal isn't to predict every crash. Nobody can do that consistently. The goal is to own things that still matter when uncertainty arrives. Because when the tide goes out, you discover what was truly valuable all along. If the economy became uncertain tomorrow, would your investments still make sense? That's a question every investor should ask. And if you're looking at property as part of a long-term wealth strategy, let's have a conversation. The best investments aren't always the most exciting. Sometimes, they're simply the ones that survive.